Hello and welcome to another update video about QNT Quant. Let's start with a higher level outlook. My view is still that we've already seen the bear market low here is around $40. At the time we reached the 88.7% Fibonacci retracement level. Here we did reverse and we started to move up in a wave one, an impulsive wave, indicating the trend has changed. We already talked about that. We then moved down in a wave two. We hit my target area at the time. However, we only reached the top of the area. So I would have liked it to see a little bit lower, but we touched the area. So scenario fulfilled, but we really only did the minimum. We reached the 50% Fibonacci retracement at the time. And now we are moving up in this third wave. That is my current expectation, that we are in this third wave. I don't know exactly where that will be. Yeah, we need to see the wave 2 low for that, which I mean is that in this wave 3 at the moment, we have already seen the first wave, because the wave 3 itself is a 5-wave move. So we've seen the first wave, which peaked around $230. We are now in our wave 2 of 3. There will be a wave 3 of 3. We come down in a 4 of 3 and we'll move up in a 5 of 3. That is the expectation. Well, I can only give you my primary expectation. I mean, there's other possibilities how this can be interpreted. Doesn't really make too much sense to focus on it because we can really only trade what's in front of us. But the other interpretation would be that all of this was a wave 1, which means that we have to measure this wave 1 differently, which means that also the wave 2 target area needs to shift and it would move down a little bit. So if you see us break below this green area, or if we can see a risk of us breaking below that area because we might come down into it too fast or whatever, then I might change the primary expectation, right? But still, I think we are in a second wave, in a wave 2. So let's zoom in. So that means the uptrend is ongoing and we will push higher. That is currently my expectation. However, in the very short term, the expectation is to actually come down a little bit lower. And another evidence, or a piece of evidence for that, is actually that Quant hasn't really participated in any of the rallies in the last few days. And here again, it's so nice to see that correlations come and go. Yeah, and that is exactly what I talk about all the time. And this is the evidence. This is pure evidence. I mean, always get the comments about Bitcoin, Ethereum, you can't decouple Bitcoin from Ethereum. I mean, they have decoupled already since June. Yeah, Quant as well. Quant doesn't care about Bitcoin. Yeah, it moves on its own. So you don't get these correlations. Of course, a little bit. Yeah, I mean, but Ethereum made like 40% in the last couple of weeks. What did Quant do? Yeah, not much. So correlations come and go. It doesn't make sense to, for example, I always see, you can't analyze a crypto without considering Bitcoin. Besides that, we do Bitcoin analysis, but I would never analyze Quant and look at the Bitcoin chart and say, all right, Bitcoin is looking this, so Quant will probably do that. That doesn't make any sense. And you can see why, because Quant is just coming down or it's moving sideways while Bitcoin is moving up at the moment. So here you can see correlations are worthless. Yeah, you might, of course, to a degree, you can use correlations to get an understanding, right? We might be back in a crypto bull run or year-end rally. So generally the trend is up. But if that means that Quant runs with Bitcoin, it doesn't make any sense. Yeah. So it's worth analyzing each chart individually, understanding the individual support and resistance levels and the breakout points and the key Fibonacci support levels and the wave count. That is what makes sense, not to look at Bitcoin and say, okay, I base my Quant analysis on Bitcoin. Doesn't make sense. Okay, but I know there's different views about this, but you will ask any elite wave analysis who's got some skills and you will find the same answer. Okay, so let's take a look at this wave here. So we look at wave 1 to the upside, wave 2 to the downside. A, B, C. That's my expectation. In this wave 2, I think we are currently in the C wave. That's how I see it. Yeah. My view is we've seen the wave A already reach the target. My view is that wave B topped here in a triangle. Also, here's different interpretations, but this is my primary expectation. And wave C is currently ongoing. Wave C looks good. Yeah, it looks like that after we peaked in wave E, we made a small 1-2 setup, came down in wave 3, a strong sell-off, moved up in a wave 4. It's a fairly strong wave 4, but it didn't cut into the wave 1 price region. And now we could be coming down in the 5th wave. So that could then only be the first wave of the C wave. Yeah, so it could become something like this: wave 1 down, wave 2 up, 3, 4, 5. Okay, just to give you an idea how this could be working out. Next key support for me is the previous swing low at $161, and then the key support area here at 157. If we break 157, that would unlock much more downside potential. I think we are going to break it. That would be my primary expectation, because I would like to see a C wave below wave A, but I don't know if it will be broken in the first attempt, because as I just showed you and told you, this could become a long C wave. So we might do, after one more low, this as a wave 1. We will retrace in a wave 2, 3, 4, 5. So I don't think we're necessarily going to break it. There will certainly be some kind of a reaction at this 50% retracement level. It's never 100% guaranteed, but I would be surprised to go through straight away. That would rather strengthen my view that this wave C is ongoing, right? But yeah, this is the next key level. The alternative interpretation would be that wave B is still not finished, that this either becomes a larger triangle, which is possible as well. I mean, there's nothing really stopping this chart from just extending out in a larger A, B, C, D, E, and then come down. That's possible. Or just thinking, or this was the wave A, yeah. Then we might still be in wave B. So we could also say this was the A wave of the B wave. This is the B wave of the B wave, and there will be another C wave of the B wave, and then we come down. So this is all possible, unfortunately, but again, we can only trade and assume what's in front of us. So at the moment, this is the valid and most likely interpretation. If we now move higher and break above the E wave high at $179, then my first call would be that wave B wasn't finished and is actually extending. Yeah, or we do this triangle. But at the moment, I'm focusing on the downside. I gave you the next key support levels, the next breakout points, and I gave you the invalidation point to the upside. So that is sort of my view at the moment about Quant. I think primarily we will get into this area. How long that takes, I can't really say, but I don't think it will happen tomorrow. It will take a bit of time to finish off this wave 2 or this wave C of 2. That would be my next accumulation phase as well. I sometimes get the questions, where would I buy again? Well, I took profits at $185 and make you aware. I'm unsure, should I buy at 157? I don't think I will yet. Yeah, I don't think I will yet. I would wait personally, and it's only my own decision. You can do what you want. I'll probably look at around about the area around the 61.8 retracement. I mean, I talked about before how I normally trade this stuff by using the Elliott waves, yeah. And this is here in some kind, I scale up volume like this. So I buy very little at the 50% retracement in this case. I don't know if I do yet, haven't decided yet, because you can't just trade everything. I buy more at the 61.8 and then at the 78.6. The point is that if we drop below the 78.6 retracement, we probably come down quite strongly, because it would increase the invalidation possibilities of this scenario. And that is why I would normally put a stop loss somewhere below that level. And that means the bulk of the volume and the bulk of the risk sits very close to the support level. So that's normally how I trade with Elliott waves, right? And taking profits is exactly the other way around, right? So having most of the risk as close as possible to support, but having a foot in the door already at the 50% retracement. But again, there's different strategies, just the way I do it. So yeah, that's my update about Quant. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye bye.